Question: is it wise to pay off your mortgage whilst the real estate market is declining and the value of your home may be going down in value? Or would you be better off to go and take that money and invest it? Let's discuss. Welcome back to my channel. My name is Reese. In today's video, I'm going to be discussing whether or not you should be focusing on paying down your mortgage or if you should be taking and utilizing that money elsewhere. Because building your wealth by paying down your mortgage isn't a bad thing, but you shouldn't just not consider any other investment options because some of them may be more beneficial for you. With Australia's interest rates at record lows, paying off your mortgage sooner should be even easier by today's standards. However, it is still worth considering using that extra cash to put towards other investing opportunities such as buying an investment property or investing in the share market. The three most common ways to invest extra cash instead of paying down your mortgage would be to invest your money into superannuation by making voluntary contributions, which offer many tax benefits, just keeping in mind that you won't be able to access this money until you retire. Investing into the real estate market, where you could go out and buy an investment property, which again has many tax benefits which you could capitalize on. And on top of this, in a declining market where the values of homes are decreasing, you could scoop something up for a bit cheaper than you might expect. And finally, investing in the share market, which definitely will help you diversify your portfolio and your holdings. And not only will you potentially build wealth, but you can potentially dodge the bullet of the housing bubble. The real estate market is on the decline, and if you don't have a lot of faith in it and think that it's going to continue declining in value, the share market could be a very suitable option or alternative to investing in the other ways that I've mentioned in this video already. All of these options are viable alternatives to paying down your mortgage. They all do come with their own risks, but they also come with the opportunity for you to greatly benefit from them in the future. Personally, I believe that it does not matter if the value of your house goes up or down. Paying off your owner-occupied mortgage as fast as you can is always going to be a good thing. Think about it like this: your investments will need to have a better after-tax return than the interest rate of your mortgage for it to be worth you investing that money instead of paying down that mortgage. And you can never be sure that that's going to happen. And on top of that, there's always the risk of your investments underperforming. From a mentality point of view, paying down your debt is guaranteed. The market is not. Investing once you are debt-free and having nothing hanging over your head is going to be a great feeling, and you're obviously going to feel safer than if you had that debt on your shoulders. The main considerations when deciding what to do with your extra cash would be things like the interest rate for the property, the type of property you are paying down, whether it be an investment or a principal place of residence, which is an owner-occupied property. Your return rate should be higher than your home loan rate, and how easy it would be to sell your investments if required. My opinion would be to pay down your non-tax deductible debt first, which would be something like your owner-occupied property. That way, if in the event of someone losing their job in the family, your home isn't going to be on the line because that debt is the first thing that you've covered, meaning you've got less debt to service, meaning you should be in a more manageable position. I also just wanted to touch base on this. Throughout the video, I've been saying paying off this debt, but this is how it's portrayed in the outside world, but it's not actually the real best way of doing it. The most efficient way to pay down this debt would be to put that money into what's called an offset account or into the loan, but making sure that you have an instant redraw capability with no cap, meaning you can pay off that loan, but if you needed access to 50 grand tomorrow, you can withdraw that 50 grand instantly and it not affect your home loan, and there are no fees associated with it. Both of these are existing things and they are offered by lots of different lenders and banks, and you can look into it a little bit further if you're interested. I actually will leave a link in the description below to my video on offset accounts and how they work if you're interested. I just wanted to touch on that because it's the same as paying down the loan, just with more flexibility. That way you can decide to pay down the mortgage whenever you want or invest it in something nice if something does eventually come up. And then on top of this, I just want to reiterate again that if you do decide to go down the path of using redraw, where you put your money into your home loan that has a redraw capability, just make sure there are no mishaps or causes that would stop you from being able to quickly access that money if you needed it. At the end of the day, there is no guaranteed answer to quickly building wealth, and everyone's situation is different. Regardless, going down any of the suggestions that I've talked about in this video are going to benefit your financial position. There just may be a better option for you, and hopefully I've kind of covered all of the bases and you've had an opportunity to now take a step back and go, okay, there are some options here, which one's the best for me? In my opinion, and only my opinion, paying down owner-occupied debt is going to be your best way forward at this current point in time where interest rates are so low and the economy is so unstable, because you should be able to pay it off quickly and basically be feeling pretty comfortable with your mortgage in no time. Overall, I hope you enjoyed today's video and I hope that it was informative. If you did enjoy it, please consider liking and subscribing. And as always, I will see you in the next one.